With so much courses being marketed and many selling signals, can we actually take control of our own trading or investing success? The content covered may just answer the question. Hey, this is Mason from Mason's Forex Trading Investments. Please take note of the risk disclaimer. Everything provided in this video is strictly for educational purposes. Please subscribe to this YouTube channel. Like and share this video with your friends and family. Also, please click the YouTube notification bell so you will get a notification for new videos. And you can also find us on Facebook as Mason's Forex Trading and Investments and like in our page. So this is the MT4 platform, and I have the Bitcoin daily chart open. I've marked a significant value or area, which is 13,674.90. So this is the red line which is shown on the screen. If you look left, price reaches the level and moves away. So currently at this price level, we have broke out, or it's defined as a breakout trade. If you can see, this is the area which we always have, or it's applicable, and price actually broke out in this candle here, or with this candle here. You take a line and you place it on the peak of the candle. You'll see that we actually broke out this candle here. Furthermore, there's an expectation for price to push up higher from the daily chart. We're going to be using the 1 hour charts for our testing. So I already have the simulator in place. It's already working. Let us look at the support and resistance for technical analysis. Here we need to take note, as price reaches the resistance level, there's an expectation for price to move away. And for the support level, as price comes to this level, there's also an expectation for price to move away. And we will be looking for different types of candlestick formations. This will form the signal for us to enter the trade. So we have an engulfing bar, pin bar, and breakout, which form strategy 1, strategy 2, and 3. We also have a bearish price structure, which is the engulfing bar, pin bar, and breakout bar. So a few rules that I need to mention. The stop loss will be 1 ATR, which is defined as an average true range. It's an indicator on MT4 which shows the volatility in the market. We can use this tool to help with stop loss placement. So a 14-day period ATR gives us the average volatility for the previous 14 days. And we're also going to drag our stop loss to break even when we reach a 1:1 risk to reward. And then we're going to trail the stop losses to catch any further movements. I'll explain that as we trade. We're going to use 2 moving averages, a 50 moving average and a 100 moving average as a guide. We're going to buy above both the moving averages, and we're going to sell below moving averages if there's an opportunity to sell. We have a 2 candle pullback and a breakout candle. Based on our plan, or rather our summarized plan, we have a breakout. We have a 2 candle pullback and a breakout above. Price breaks above this level here with this green candle here. So it could be a signal to entry, but for me personally, I wouldn't take the trade because I see this rejection bar here. This rejection bar is telling me that the sellers may want to push price lower. I'm going to pass. I'm going to pass that trade. Here we now, I pause the simulator. We have a 2 candle pullback. If price were to close higher, I would set my stop loss 1 ATR. Let's see what happens. In our case, unfortunately, it does not close above, give us a breakout bar. So I'm looking for something like this, where price breaks out fully. So I do have a minimum of 2 candles. It doesn't necessarily mean it has to be 2 candles. It can be a pullback of 3 candles or 3 red candles or even 4 red candles. It will depend on the market. And if you're wondering how to use the simulator, I have discussed it in my backtesting video. I will leave a link for you in the description. And also this simulator, I have sourced it for free, but it is available for free. You don't have to pay for it. This green candle here forms a breakout. Okay, we have a 2 candle pullback currently. Let's see if you can find any clues. So we're still currently looking for a potential entry. If you look closely for information purposes, we drew a line here. You look at it, price pushes up to this resistance, and it retraces, it pushes out, it breaks out, reaches this level, finds some sort of support, pushes up, goes lower, gets supported, pushes back up, comes back, gets supported, and then it ranges. So this is typical resistance. R is turned to support. So this is how basically support and resistance work more often than not. If you go back to our daily chart, ideally, and what would make this trade or give it significance would be if price could reach this level and then potentially move higher. So this resistance here, this resistance level becomes support in the future. So this occurrence, it doesn't happen all the time, but it meets or makes up an ideal situation. Just want to give you that insight. Okay, let us go back to the testing part. So we're still hunting for an entry. Okay, if you look at where we are situated currently, we are above the 100 moving average. So this is just a guide. You can use it if you wish to use it, or you can test with it, or you can test without it. You have the software, or you have this back testing or simulating software to test any method or technique that you have. Now, for the signals, the so-called signals that everyone pays for, this bar is a potential entry signal. So let me explain why this is an entry signal. If you look at the past, price reached this level, moved away. We had a support there. And now this wick actually is supported at this level. It's supported here, and it was supported in the past. Go back to our structure. It is, if you look at it, it's a type of engulfing bar, but it's actually a pin bar. So what that means is this pin bar engulfs the previous or covers the previous bar. So this, I will use this as an entry signal. So if you can imagine it in lines, it would be something. It would be something like that. I'm gonna buy. confirm buy one standard lot Bitcoin USD. Unfortunately, in this with this specific broker, I can't use 0.01 as my lot size. So I would have to use this lot size. I'm going to slow down the simulator. Now I need to set a stop loss based on what we defined. We have an 14 ATR and the amount is approximately 226.55. I'm gonna use the end of the candle or the wick to place a stop loss. So that would be approximately 2265, which is 2,265 pips. So I'm going to just approximate it. You can go and find the exact value. So it will be approximately 14,561. I go to this blue button, then I click edit. So the approximate stop loss will be fixed price 14,561, and I set my stop loss. I run the simulator. You can see we potentially may lose $6.12, and this is a $1,000 account, so it falls very well in our risk parameters. Also, if you're looking for a detailed plan, we'll also leave the link in the description, because this is just a quick summary of the strategy. So you can, if you go to Google, you will be able to get different types of strategies, or you may also find strategies or get strategies from your friends or other YouTube channels. You get those strategies and you come and you place it, or rather you use it by testing it on the simulator, and you confirm the results. Okay, we're letting the simulator run. You remember this was an approximate entry. That will be E. This will be L, or rather SL, stop loss. Now our target must be 1:1 at least. Our take profit will be somewhere around there. So we're risking $1. We're trying to make another dollar at a minimum. Also to mention, with this simulator, you'll get a lot of experience trading Bitcoin. You can test as many times as you wish. just to give you more confidence and more belief in yourself and more belief in the system. So be patient. And I believe we could have actually placed a take profit at this level. So we have identified it. We have identified this price level. If you look at here, we have one standard lots. On other platforms or other brokers, you can actually, if this was a flexible broker and we open one standard lot, we could actually take half of the position off, or we could bank half of $5.78. It's about $2.50 or $3 almost. We could have managed our risk, paid ourselves something. Now, since we met our 1:1 reward, I want to quickly show you how to take your stop loss to break even, create your risk-free trade. So what we're going to do is we can do it on this SL, on this tab or dialog box. We can place our shift our stop loss to approximately 15,235. In our case, or in my case, I want to hold this position and see if I can make a higher return. Let's see how it goes. If you look at what's going on here, we reach this level and then we seem to be moving in a type of range. So what can happen here is, by looking left, it could happen that price further collapses from this level. So this could also be another point to completely take off your profits. It could have also happened at this level. As you can see, there's a relatively big candle or red candle here. Sometimes the market reaches these levels, or it happens quite often if you test and look for it, and then it tends to move away as shown. So that's important to bring to your attention. As you do more testing, you'll see it for yourself. So we're holding this position. We are up 62 cents, so we paid ourselves a little money for our effort. You can pay yourself a little more if you want, but don't get greedy. Let us continue testing. If you have any questions or comments, please leave it on the video on YouTube, and I'll definitely answer it for you. Okay, we're now up $12.27. We can trail our stops, lift the stop loss higher, protect our profits. So if you look at here, we have plus 3.27, so that will be the minimum that we'll take away from this trade. We can see there is reaction. Price pushes up, moves away. Price pushes up, moves away. Price pushes up. It comes to this area. There is some significance here. Let's see if we can find another entry. Here we have a nice pin bar. We have this red bar, this pin bar. Go back to the notes. We would now need a higher bar similar to this green bar. Then it would form strategy 2. Okay, this bar is higher. So we do have another signal. Or this is how you give yourself signals if you want to put it that way. The problem with taking this trade is if we use the 180 our stop loss, our target, let's say our take profit would be at that previous structure. It's a very small area, or rather price is very close to this level. So taking this trade may not be worth it. We can decide that no, we don't want to take this trade, because at minimum, if I took the profit here, let me see if I can draw it. Our stop loss will be approximately here. What I'm trying to say is our entry will be here, or rather approximate entry. If we decided to take it, this will be an approximate stop loss, as our rules tell us it must be 180 or below the low of this wick here, this candle structures, 3 of these bars. We are also at the significant level, so you can see it is an area of value. The only problem is, where do you take your take profit? Where do you get your minimum 1:1? So in this situation, this can be your homework. Whenever you have this type of situation, you can look at minimizing your ATR. Remember, 1 ATR is an example that I use. You can also try 0.5. You can try 0.8 as the ATR for stop loss. So the most important thing, whatever decision you decide to use, or to make rather, make sure it's consistent. So if you're using 0.5, you can use 0.5 throughout the Bitcoin chart and simulate it and get results. You can try the 1 ATR. You can also use it across the whole chart. Everything is flexible. You may even decide, when I have this type of structure, when a market is trending, Trending can be defined by above a 50 moving average, as in our case. You can also tell yourself, in the situation, I will now use 0.5 ATR with, or maybe 0.25 ATR. So you can try and get yourself involved in the market, because what can happen is we've got two options. Price can go up, reach that level, and collapse lower and take you out. And you can have this opportunity where price goes up, maybe it retraces a little, and then it continues, whoops, goes up, pulls back a bit, and then it continues going higher. So you may end up actually missing the move. So please test it, and these are the options that you have. I brought it to your attention so you know about it. Let's see if we can get one more trade. Draw a line. Sorry, if you draw a line like this, this is a resistance. So R resistance. So this whole area around here, we can say it's a type of resistance. And then what we've mentioned, resistance becomes or can become support in the future. So we can expect something like this to happen. Let's see if it happens. You can see we had this red bar we mentioned earlier, and it may reach somewhere around there, make a reverse. So one bar here. Let's see what happens. Okay, in our case, it only gave us one bar as a reversal, and then it broke out. So this example here is to explain to you or show you that anything can happen in the market. Sometimes price, you continuously do testing, you'll see price reaches this significant level, and sometimes it can just collapse lower. In our case, it broke through and it just gave us one bar only. So important information for you. See for more setups, more signals. Okay, this is a nice breakout bar. Ideally, I would have looked for something similar to this. I would have hoped this candle here would have broke out, and I would have considered taking this bar as a breakout bar. but unfortunately never meet the rules, so we're going to skip it. So you're going to follow the same structure. We're still on the 17th of November. Actually, we're on the 18th of the 11th, 2020. So we approximately, I think it's 6 months, previous 6 months data. You can go as long as you want to go in your charts. The most important thing is to get as much experience as you can. So you can test the hourly charts, you can test the 4 hourly charts, you can test the daily charts. If you come to this tab here and you click its written results, you'll notice that we also have the information of our transactions. So it gives us the date, the time, and the transaction. And then you can also look at graph, report. Ideally, what you want to do is you want to have a Excel spreadsheet similar to this, and you can put Bitcoin here. Don't need, okay, when you're doing your testing, whichever pair you're testing, you can document it. You want to have your starting balance based on what you can afford to lose. In our case, let's just say it's $1,000, so we'll have $1,000 there. You'll have your risk per position, you'll have your total gain, your maximum drawdown. Everything needs to be documented here. And based on the strategy that I tested, or rather the strategy that I gave you to go and test, let's just say you conduct 50 trades based on this 50. Okay, we are here. Okay, let's just say you do 60. The more the merrier. And let's just say you have from 1000, let's just say now you have 1500, positive 1500. You made money, and you know that this strategy that you're using has a positive return. Remember, it's not about the money, it's about giving us positive results, and it's about us continuously implementing this process and following the rules. So that's where the challenge comes in Forex. We want to enter to make money, or we want to do something which is not part of our rules. So if this gave us positive 1500 after 60 or 100, as much trades as you can get, because you become more comfortable with trading and you become more comfortable with yourself. Let's say this thing after 60 trades gave us minus 500. Or we lost. So what we now need to do is we need to go back to the drawing board, and we don't give up on the strategy. In fact, we try and test it more. So what we can do is we can, instead of using an ATR for 14-day period, we can maybe change that to 7. If you look at here, you see it's a 14-day. You can maybe change it to a 7. So we're trying to optimize the system and see where we can improve. Maybe you can change the ATR settings to optimize this strategy and see what's going on. You can look at adopting a different type of setup, a different strategy. If you look at here, when this bar broke out in the significant level, and let's just say from the from this bar, this green bar here, you had, or from the end, you had a 1 ATR stop loss. You can see you could have had 2 times your return, rather let's just say 1.5 times. This will be 1, and approximately here will be 1.5 times your return. You can adopt a strategy for handling this breakout bar by just testing it. Whenever it happens, you test it and then you call it breakout bar strategy, and then you go back to your document. Okay, sorry, wrong one. Here you can title this page, or this document will be specifically called, let's just say, handling 3 strategies. Or if you want to specifically test engulfing bar, that whole document with your returns can be called engulfing bar or pin bar strategy, but have it all documented, and you can test your system 2 or 3 times. What that means is, if you're testing engulfing bar, you can test it 2 or 3 times again, such that you are more, you are trying to engrave the skill in you. And with the software, which is free, it makes things very, very easy, and everything is accelerated. You can learn very, very fast by simulating. You can go and create your own strategies. I've mentioned 1 ATR, and then I've also mentioned 0.5 ATR. If you have losses, you can actually optimize your risk, or you can optimize your ATR. So I hope this video adds value for you. So keep testing and keep upgrading your skills. Until the next video, goodbye.